What's happening, investors? It's finally time to talk Google. I haven't made a review of this company yet. I want to talk about it a little bit, give you a brief overview, some important metrics that I think we should be keeping in mind, and then explain why my opinion is what it is about this company. First, the website. I think you know it. You've been there. Usually there's more to explain about it, but I think this is really self-explanatory. Things to note about this website: number one in the world, most visits, no big deal, the most popular website ever. Websites still do matter. I know that many people in parts of the world are moving into more app-centric type of experiences, like in China, for example, or even in the United States. People are just clicking on ChatGPT instead of Google.com, but those of us that are millennials or older still probably use Google. But nonetheless, this is the website. They also have the number two most visited website in the world, which is YouTube, right here. This website that you're watching this thing on, okay? So they have the number one and number two most popular websites in the world by a lot, by the way. A mind-blowing fact about Google: it processes 5 trillion searches per year. Trillion. Which works out to, I haven't done the math, but it's anywhere between 8 and 16 billion searches per day. Pretty massive, pretty massive. And now the big talk is that Google is under threat because of operations like ChatGPT and other AI platforms like Perplexity, etc. And the rebuttal to that is, from my perspective, that it's really not that big of a deal. Google is no stranger to competition. I know that the crew operating it now is different than the one back in the 2000s, but if you remember, they beat quite a lot of people in many, many different aspects. So, let's start, shall we? This is Google, Alphabet. Alphabet is obviously the parent company. Google is part of the parent company. They have other projects under Alphabet now, like Waymo, etc., other offshoots. The price has not grown that much in the last year, but as you can see here, since 2005, in the last 20 years, it's up almost 3,000%, which is a respectable number. It's more than the market. Now, moving on to the financials, just some quick overviews. In fact, I'm going to do this. I have video notes. Things that I think are important, okay? That's what I'm going to talk about. I'm going to do a little bit of APA style here, okay? Alternative perspective analysis. I'm just going to take the most important numbers that I think matter, and then we're going to talk about them. What I think is important. First of all, they make about 100 billion earnings per year. Stock-based compensation is quite high, one of the highest in the world, at 23 billion per year. 23 billion stock compensation. It's down a tiny bit in the last quarter, but it's still substantial, and it beats other companies like Apple, etc. Even though Apple's worth more, and Amazon and so forth. Apple is really big on stock compensation. I have a friend that's writing an article that explaining how that's kind of like obscuring the cost of employment. Okay, so their operating earnings are actually a lot smaller than they claim. But all the big companies, all the Mag 7s or whatever they're called now, have kind of similar situation happening where the issues a lot of stocks to the employees. The stock goes up because they repurchase a lot of shares, and so now all this wealth is kind of like going into the employees, which is a good place to go. I'd rather the employees get rich. But let's move on. Capital expenditures, another important figure, 53 billion per year. That's a lot. Now, for a software business, that was the whole premise of software business, that they're very asset light. Well, obviously that theme is out. Okay, no more asset light. Okay, these companies are spending like drunken sailors. Their capex is larger than like almost anyone in the world. I mean, it's like almost looking at an oil company out there or a mining company. Okay, tons and tons of money going out to things like servers, processing power, electricity. I was amazed at how much electricity that these companies actually use. So much electricity that they're even thinking of creating their own nuclear power stations, right? You guys remember that in the news story? Isn't that crazy? I think they should do it. I mean, if they could get some nuclear power station, that would be, that make the rest of our lives a little bit easier. Probably would have better access to electricity. It'd be cheaper. It'd be great. Next, sold securities. Oh, okay. So their cash position. Their cash position is sitting at 68 billion at the moment. It was 101 at its highest in 2021, and it's mostly because they were selling securities in 2020, 2021 to raise cash, and then bought securities in 2023 and 2024 and 5, which kind of underlines poor market timing anyways. I don't want to say market management, but market timing. And now, by the way, they just acquired Wiz for 32 billion, which I'm going to touch on that in a little bit. Why I think it's expensive as hell. It's 60 times, revenue. All right. But it's got good synergy with the rest of their kit. And I think it's going to be fine. And it might, it might help them in other ways. So the repurchase of common stocks is 62 billion per year. So 53 in capex, 62 billion per year in repurchasing stock, and 23 billion per year in stock-based compensation. It's a lot of expenses, guys. We're already well over $100 billion. So if it wasn't for that, repurchasing of stocks, then we'd be sitting at leftover money that could be used for things like, I don't know, dividends or research and development, etc. But repurchasing stock is fine. It's a good way to give money back to the shareholders by raising the price of their stock. And also, by the way, it has kind of a hidden but well-known side effect of reducing liabilities. How does it reduce liability? Well, stocks are actually liabilities, right? And also not just because it's part of the company, but because it pays a dividend now, you're actually reducing the amount of dividend you're paying each time around when you repurchase stocks back, right? It's kind of like buying your own stock that you pay dividend with, so you don't have to pay it to yourself. So it cancels out. You don't actually have to pay dividend. So in that way, you're reducing liabilities. So it's a really good thing, especially if you're paying out a dividend, to repurchase some stock. It works together really well. But of course, for both of these activities, you need cash. So the real secret is being able to make cash. Net cash sits at 68 billion, like I talked about. So they repurchased a lot of securities in 2020, 2021 in order to raise cash, and now they're kind of like, when this market was low, they're selling in the lows, and now they're buying in the highs, including Wiz for 32 billion. Okay. So that was a really well-timed transaction on Wiz's part. And the APA here, the alternative perspective analysis here, is that it can be viewed as raising cash by selling securities, which causes the cash piles to swell, then starting in 2022, starting to buy and reduce cash reserves. So if you want to see what I'm talking about, this is stockanalysis.com. I use it regularly. I recommend it. I'm not affiliated. Let's look at the cash flow. Investment in securities. Look at this. So in 2020 and 2021, right? That's like $18 billion here. Over $18 billion went into their cash, right? So they were plus 18 from these 2 years. And then 16 billion of purchases here in 2022. And then 6.7 billion in 2023, and now 12.5 in 2024. So if you add all these numbers together, it's about, it's about the difference in cash that they're currently experiencing from the highs to the current position. So the cash on hand basically is about the same. It's very closely related to investing cash flow, investment in securities. That's my point there. You can look at it like that. Now, Google cybersecurity acquisitions will bring in customers and talent. So this is the point I wanted to make about Wiz. It's not just that they need some security on their servers, but I think that the customers of Wiz, which really like the company, are gonna stick with that and they're gonna become Google customers now. So it's not only bringing the talent of Wiz and their ability to create interfaces and a product that customers really like, but also the customers themselves. So that's going to boost their top line. Wiz is growing extremely fast, and it might be the dominant now security go-to for servers. I think it's going to be a really, really good synergy, especially since the next point here, Google has over 900,000 servers worldwide. That's a ton of servers, almost 1 million servers. I did a quick comparison here with Amazon at 500,000, so at 500,000, so almost double Amazon's servers. And think about Amazon, they have to run AWS, right? It's the most popular cloud service out there. They have to run their website, all this, processing. That's 500,000 servers. Google has 900 million. And what that is pointing to a physical moat previously scarce for big tech companies. So the whole selling point of the tech companies was that, they're asset light. You don't have to do a lot of capex, but you give up things like physical moats. And now that's not actually the case. I mean, 900,000 servers is not very easy to build up. Even if you say, okay, I have the money, I'm buying 1 million servers, where are you going to get these servers from, right? How long is it going to take NVIDIA or whichever company you decide to hire for this project to build you those servers? By the time you get your 1 million servers, they're going to be outdated. Like, you're going to have to start thinking about something else. So it's a really big, I think, physical moat that was absent from big tech companies in the past. And I think it adds value. Like, it's really hard to replicate what Google does. And not just from a software perspective and from a reach from a user base, from a sticky user base, I might add, but also from a physical perspective. You can't build those out. It's going to take forever. I'm sure it's taking Google a really long time to build that infrastructure out. Non-physical moats were the go-to, and here are some that are present in Google that I think are very important. Number one, talent. Okay, Google's got some of the best software engineers in the world, full stop. All right. If you think that that's not correct, please comment in below, but I'm pretty sure it's unarguable. I know that many of them left and started their own companies and blah, 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 but they're acquiring new talent, okay, as per Wiz, and they keep acquiring little small companies, not just Wiz, and they get that talent and they get them working for Google, and they have to stay there for a very long time and contribute to the company as part of their contracts, etc., or their stock options or whatever it is. There are incentives in place. I know it's kind of like imprisoning all this talent to work for you, but people like money. What are you going to do? And Google's a really good cash generating operating environment where you can get rich if you want, and once you have your billions, then you can go and start your own company or whatever, as long as you don't take any of your old IP meaning intellectual property. Talent. The top websites, as I mentioned, in the world, number 1 and 2, google.com and YouTube. The Google ecosystem. The ecosystem, guys. I think this is important. Okay. Intellectual property. How much intellectual property does Google have? A ton. Gmail, right? Let's integrate this with the ecosystem comment. Guys, who here does not have a Gmail. Do you have a Gmail? I bet you have a Gmail. I have a Gmail. My parents have a Gmail. My mom has a Gmail. My sister has a Gmail. My friends all have Gmails. My wife has a Gmail. Everybody has Gmail. Okay? I don't even know anybody without a Gmail. All right? Nobody's going to switch from their Gmail account. There's nobody switching from Gmail. It's not happening. Okay? People run their websites through their Gmail account. It's crazy out there. Okay? It's not. And Gmail, you see all those advertisements on Gmail. For me, I probably see more of those Gmail sponsored emails than I see search sponsored listings. Okay, so for me personally, because I don't use Google that much to search things. I mean, I do, but not as much as I check my email all the time and I see those sponsored ads. I mean, that's got to be worth a lot, and nobody's going to switch off Gmail. Why would you? And just talking about it, from Gmail to jumping on a quick chat, Google Chat or whatever. I don't know if anybody uses that, but Google Meet I've certainly used before. I actually prefer it to something like Zoom. But it's not just that. Google Drive. It's free. It's free cloud storage, right? For the most part, up until a certain amount of data. I use it all the time for all my important stuff. I keep a copy of all my important stuff. Don't hack me. I keep a copy of all my important stuff on Google Drive because I know that if everything goes bust, if my computer goes bust, at least I have those items on there that I can recover, right? So I know that there's like Microsoft One or whatever, but everybody knows Google Drive. You link Google Drive documents. Speaking of documents, that's another thing, right, in the ecosystem. Google Docs is huge. I mean, I don't even use Excel. I just use the Google Docs. We have spreadsheets that we share with our family members and friends through Google, right? I just give them the link. And everybody does that. Like, I know Excel is all nice and cool and professional for all you, introverted people, but Google, you can have multiple people working on Google document at the same time. It's just missing a few shortcuts for the super pros, but I think it's really good. I'm not that good. I'm a noob, but to me, it matters that everything is integrated. I really like that. You got Google Sheets, Google Docs. I just jump out and start and write something, and then it auto saves at every single point that I type, and then I can go onto a different computer somewhere if I'm away from the city or my home, and I didn't bring my laptop. I can use somebody else's laptop, jump on Google Docs, and continue the work right where I left. It's crazy, right? So the ecosystem is there. And it's, even if people replicate it, the huge user base is getting used to your stuff, and it's just a hassle to try to go out of it in order to do what you're trying to do. So it's built a really, really, really big, I think, software moat, and now it has a really big hardware moat. It's going to be hard to crack. I mean, I know that the whole AI thing is a bit of a problem, but I don't trust it personally. I know I'm going on for a little bit of a rant. Let me see if my notes are still telling me to say something else. Okay, yeah. So on top of that, Google has options on growth from offshoot projects like Waymo. I know. But some of the works that they've done have actually really paid out, like Google Maps. I mean, guys, Android, that worked out. It's only the most popular phone software, operating system in the world, right? Everything is an offshoot of Android. That was successful. What about Chrome? What's your browser right now? Be honest. What is your browser? It's Chrome, isn't it? It's Chrome. You're not using Bing. I know you're not using Bing. No, and you're not using Mozilla Firefox either, okay? You're not using any of those. You're using Chrome. Be honest. And those projects have worked out. Some of their offshoots work out. You don't have to focus on their failures like Google Glass. Okay, that was intentional. Or other failed hardware projects. I think the Pixel's alright. Pixel looks good. I don't use it. I'm an Apple user myself. But if I had to use an Android phone, I would probably use the Pixel. I'd probably use that. Tell me if I'm wrong about that. Is that distasteful? All right, what was my rant about? Okay, ChatGPT and AI. So, first of all, oh, I forgot to mention when it comes to Google, they also have this, huge cloud business that's actually gaining more market share than the rest of the big companies like Azure and AWS, etc. Google's making the most strides, and now with this security upgrade from all these software security companies that have been buying, they're probably gonna get even more market share. And guess what runs on these clouds, guys? AI. So go ahead, compete, but you're using my servers, right? You're using my servers. Why do I say mine? Because I bought some Google stock. Guys. My average is about 160. It's about 150 right now. I know. I bought before the drop today. It dropped like, 4% or something like that. It's been a precipitous drop. All the big companies are dropping. Google's probably going to drop even more. Meta's dropped. Everything's dropped. Apple's dropped. Amazon's dropped. Everything's dropping. But I think that out of all the companies, Apple has probably the greatest moat, but they're also $3 trillion company, where Google is probably the second biggest moat, and it's only a 1.8 trillion company now, with a forward PE of, get this, it's like 16 point something. 16 point something. Let me see if actually this website here tells me what the forward PE is. Statistics, PE ratio 18.74 at the moment. Insane. I've only seen Google as low as like 17 price to earnings before, and I think that was in 2022. I would have to go really far back to see something like that again. Look at this, guys. 16.81. Can you believe this? 16.81 price to earnings ratio. And you know what? I think they've said, if I'm not mistaken, that the CapEx expenditure is going to actually slow down. Like after this quarter, I think they're going to do another like super heavy CapEx quarter. And then it's going to slow down a little bit, which gives more money for what? More R&D, more offshore projects, more share buybacks, more dividend. They've started the dividend. They're going to keep it going. They might even raise it soon again, right? I think they raised it again? I think they just introduced it a few quarters ago. They may have already raised it a little bit. Who knows? But it doesn't matter. It's like 0.5% right now. They're trying to do the whole small dividend thing like Apple. So bottom line here is this company is a steal. I don't understand why more people aren't buying it. I mean, I think if it keeps dropping, I'm going to sell my core positions. Okay, like Realty Income and all these safe kind of like dividend stocks that I've been owning. I'm gonna sell them and just start like majorly laying into Google. Like this thing is not gonna go away. On top of that, this thing, Google, it doesn't really have to worry about tariffs. It's not like Amazon or Apple where they have all these hardware kind of pieces and they already got the semiconductors exempted from tariffs anyways, which is the only thing that Google really uses, right? As an import. So no tariff. I mean, this is like the golden play. I don't understand. Where are the flaws in my reasoning? I want to hear the flaws. I want to hear why we should not be buying Google head over fist right now. Please tell me, because I'm going insane. All right. I hope this keeps dropping so I can go all in at 130 or 120 or 100 or something like that. Let me know why I'm crazy, guys. Let me know.